Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is November 17th, 2013 edition of Market Outlook. Don't forget to sign up for this at www.marketgauge.com and you'll get your free video and Market Outlook text version as well every week. So, market continues its relentless rise. As you know, uh, Yellen, our incoming Fed chairman in chief, has basically announced that she will continue to keep the money spigot on. And so, with a slow but steady growth that's not quite fast enough, that is very friendly to the market. So let's take a look at the S&P, look at some of the critical levels. We'll go through the market internals, bonds, a little bit of gold, and also what's happening with China as well. The key pattern here to be aware of is that we have a very distinct trading channel with the new highs that we made recently. You have a very good type of trend line setup here, right? You have a low here, another low here. You made a series of highs. That's a valid trend line. Now, what we can do to find where the market might exhaust itself to the upside is drop a parallel on the highs. And as you can see, we're sort of approaching that or at or through the the closest channel line. However, if we take the absolute extreme, you can see that the highs here are somewhere around 185 to the 186 level over the next couple of weeks. Really about 185. Obviously, if you really explode to the upside, you're talking about 184. But as this is, moving higher, the outer regions of this upward channel move up as well. Now, one thing to note, these highs are being done on relatively light volume, right? You can see that this yellow line here is the 50-day moving average of volume. We have not really exceeded it except for a couple days, and they were strong up days as well. So overall, you can see that there's more accumulation days than distribution days, but when they are on relatively light volume, not as significant. The relative strength index, not quite overbought yet, but reaching the upper regions. And again, in bull markets, overbought RSIs have a tendency to get even more extended. Not all the time, but they can. On what we look at here is a longer term overbought, oversold scenario, looking at the Bollinger Bands on a 50-day basis, and we're not nearly, we're getting up there, but not nearly that overbought, which is interesting to note. So even with the market making new highs, not really all that extreme, and you have tremendous support right here at the 172.90 level. So you want to make sure that any corrections here, number one, really you do not want it to break this sell-off day here and close under it. So trend is intact. Things are looking pretty good overall from price structure. And again, this key reversal pattern or a potential slingshot pattern, you had two of these within a week. They've both been violated, moved to the upside. So false alarm on that. Let's take a look at the volatility. The VIX, we hit basically the lows for this year. Not surprising on new highs. Or no, not quite. Actually, back in back in the early part of the year, we did get a little bit lower, but right now we're at the bottom of the Bollinger Band, actually closed under it. So with this move up, volatility is showing definite signs of some irrational exuberance. Now, it could take one week or more for this signal to play out. So we want to watch this particular indicator and see if it comes back through the lower end of this Bollinger Band and starts trading up. That could be an early warning indicator. So overall, the pattern here, the actual pricing pattern, extremely positive. Sentiment is getting, as measured by volatility, is getting a little bit extreme to the upside when you look at the overall options market. Now let's take another look at market internals as well. We have a situation here where the market got overbought, generated a sell signal on the McClellan oscillator that looks out over a couple of weeks. We basically went sideways, and then of course the market exploded to new highs. So a couple of things. Once this market really went out to new highs and worked off its overbought situation, that signal was negated. So it was again another negative a negative signal that did not play out because of the strength of the market. It just went sideways instead. And if anything, you can see the advanced decline did work its way down and has turned back up. So not much to glom from here. Never really sold off enough in terms of up-down volume on a shorter term basis, looking out over 5 to 10 days. So not much to gather here. So market internals, I would say, is not lending any insight other than the fact that we're in extremely strong and powerful territory and sell signals are not working well in the key indices. Let's take a look at bonds. TLTs, these are the 20-year Treasury ETF. As you can see, we're still hanging on, and this is now going on for 1, 2, 3, 4 months. We're still holding on to this key 80-month moving average. So the longer term trend, although being tested this month, still intact. Now on the daily chart, let's take a look at the daily chart. It looked like we were going to get an interesting move to the upside, market moving into a recovery phase on top of the monthly chart showing signs that it might have exhausted its move to the upside. And the market, even with Yellen announcing that the Fed was going to continue to keep the spigots on, still pressure on the market, and we're actually in a bear phase on the TLTs. So we definitely want to keep track here because there's this potential for a major breakdown. If we break these lows, it'll also be breaking the lows on the 80-month moving average as well. We definitely want to keep a watch on that. And again, the other alternative way to look at this, if we can get a couple of closes above that 50-day moving average, we would basically have another attempt at a recovery phase, which might materialize into a more substantial move to the upside. So right now we're sort of in this dormant period here, lots of sideways action, not much movement, sort of surprising considering that the Fed still has the spigots on. Let's take a look at gold. Let's take a look at the gold miners. This is pretty interesting because on a relative basis, the gold miners are really cheap, even relative to gold bullion. So it looks like here on the weekly charts that you have a potential double bottom or a compound bottom forming. We really want to see the market close above 26 or so, the highs of about 3 weeks ago. Again, on the daily chart, it's sort of a weak slingshot pattern here from a couple days ago, and still intact, but we really need to hold here, or again we've got a situation where a market is relatively weak and still can get weaker. So we want to see the market hold on a closing basis these weekly lows on this chart, and as well keep an eye on a move up through this shorter term moving average, this blue moving average. I believe, let me take a look. I believe that's the 65-week moving average. Now, let's take a look at FXI. China made some major announcements. There was a slingshot pattern that was called out in Mish's service, and the market responded by moving up almost 5%. Now, what's interesting here, these major reforms by the Communist Party to a more free market economy, allowing more children to be born to each family. Those are some of the highlights. But take a look at this pattern here on the daily chart. A potential head and shoulders bottom. Again, the neckline comes in around 39 or so. We were looking for this to hold here. Interesting pattern in China. This might be one of the best emerging trades across all markets. Let's take one other look at the currency, the Chinese currency, the yuan. And you can see again that the sort of a relentless trend up. We've been sort of looking at this. It doesn't trade very actively each day. As you can see, the volume is really pretty low down here. But nonetheless, you can see improving Chinese stock market and a steadily rising and strong currency. That's quite a bit different than the United States and its currency as well. So we're going to keep an eye on this China ETF here. You can see that's a nice potential pattern. The count is somewhere probably around 45 or so, 46. The way we get that is we take a look at the lows here, which is about 31, 32. The neckline is around 39, so somewhere a count of about 7 points from the neckline brings you up to about 45 or 46, which is quite a nice rise for this particular ETF. That's it. Bye for now. Again, don't forget to sign up for Market Outlook, and see you next week. Bye.